Well, the first one I'm looking at, Blake, is what's happening in spot crude. And I mean, you can see this is just a crazy move, right? I mean, we're just trying to bring up the chart now, but
while you're doing that, yeah, that was gnarly. That was a gnarly move. It was a nasty reversal this week. So
gnarly. Is there a time in life?
That's a California term.
Is there a time in life when you should not be allowed to use words like gnarly? Is there
over the age of 70? In my book,
it's just like skateboards, isn't it? It's like, at the age of 40, you should not be allowed to be on a skateboard unless you are like Tony Hawk, for example, who can pull it off. But Blake, I mean, just gnarly. Come on, mate. Anyway, whatever. You saw that move up, didn't you? You saw the wedge, you saw the breakout. Everyone was getting bullish, including myself. I was thinking this is going to go up and test $100. The next candle, as you can see there, we made a higher high, and just from that very moment, the sellers just came in, bang. You're not going up, you're going down. We saw an engulfing pattern, and we followed through quite aggressively. And it looks like we're going to go back and test those recent lows there. So we can talk about fundamentals. The cows come home, because there are some very bullish fundamentals. We've heard from OPEC last night talking about next year's deficit coming through. They've cut their surplus for this year by half, and we can talk about what's happening in supply issues. And we could make an argument that if we get back into those lows, then we're going to find some support. But the price action at the moment continues to suggest that the demand issue from falling economics continues to be one of the big issues there. So, you're surprised. I'm surprised. Where do you see this going now?
Well, false breakouts usually lead to breakdowns. That's a good rule of thumb that's always kept me safe in the market. And so, technically, I still target $75. And when I have random people that just blurt out to me, crude will never see 75 again, then it's like I start to get a little nervous, and which did happen recently. And so it doesn't look good for bulls. And I understand the argument. We understand the bullish argument, but price action is king at this point.
Yeah, right. Absolutely. 100%.
All right. Well, speaking of price action, let's take a look at gold, because I want to do a little gold digging there, Chris. We're gonna dig for gold. What are you doing later tonight? I'm just kidding, joking. I'm joking.
I'll be sleeping.
So hey, look, I know a lot of you guys and gals are precious metal and gold bulls, and we've been watching precious metals, and I mean, frankly, the price action's been pretty bearish. However, the bear flag pattern that I have, you can see it outlined in red. It does target the 1780 level once again. Now, as you know, the 1780 level has been really a nice level to be on the long side. I mean, but it also is starting to get riskier because we're making lower highs, that there are stops situated below the level, below that 1780 level. And to be honest, I mean, that's the target. And if you want to go gold digging and you want to be on the long side, that might be a place to be long with a tight stop. But
do you mean 1680? You mean 1680?
1680. I'm sorry. I said I was saying 1780. 1680. Sorry, I don't have the chart in front of me. I'm just looking at our screen. So, 1680. It's been a really key level. You can see it highlighted in that green. And if you want to be long down there, you know where your stops need to be. But I would definitely. Well, you should always have stops in the market, but you got to keep them tight, because they might get targeted. What do you think, Chris? Well,
it always comes down to your strategy. We give these daily charts, weekly charts, because it's good oversights. But obviously, if you're day trading, if you're scalping in and out, you're swing trading, momentum, main reversion, all that sort of stuff. That's up to you. But what you're working with is a downtrend at the moment. So for me, when I'm trading intraday, my natural bias at the moment, given that we've seen 3 red candles and that all the moving averages are aligned, price and the rate of change is the downside, is that the probability is this does go down to test that 1678, 1680 level that you talk about. How price reacts into that's obviously something that we'll have to look at, and that's something that we trade. But for now, if I'm looking at the big picture situation for the time frame that we trade in and out of, is that the rate of capital is moving down. We've got real rates on 2s moving further higher, which is negative for gold. The dollar is weighing on gold. So yeah, I feel like this. I feel like the probability is this goes further lower. And the other one, of course, is well, yeah, you can see there, dollar yen is the next one, because of course, when we're talking about gold, we've got to take a view on the dollar, and dollar yen is just one way of expressing what we're seeing there. And dollar yen, this chart is something that we pulled out about an hour and a half ago. Since that time now, we are seeing a breakout. So we're now seeing 139.62 is the level that we're looking at. So that top has broken out. Now, obviously, this is a daily chart, so we need to see a close above those July highs. And that would give us a really clear assumption that the bulls are in control of this move. So I always like to wait for the daily candle to close, because sometimes you get the pin bar reversals playing through, and that can be powerful in itself. But as it stands at this stage, we've got a breakout in dollar yen. And of course, the question is will we see 140? And then what does the Bank of Japan and the Ministry of Finance do about that situation? It feels like we're trending again, doesn't it, Blake? And money can be made very well when in trending markets.
And the Bank of Japan's Kuroda had nothing to say regarding the yen and the weakness that we saw in the yen over the weekend. So that, I think, just opened the door for fresh lows in the yen and highs in the dollar yen. And Chris, I've got targets that go up to 142, 144, but when something starts really breaking out and you get this momentum behind it, I mean, who knows? I mean, those targets become more like speed bumps in the market, and it looks bullish right now. Yeah, so I think you've got to respect it. My colleague Dale Pinkert, he interviewed Adam Button from Forex Live last week, and he said one of the biggest developments that he's seen in 2022 is just recently the yen break away from the risk on, risk off model. We have stocks going down, as you pointed out earlier in the show. They're down significantly because of NVIDIA.
It's a bond proxy. It's just a bond proxy.
It definitely is, because the yen's not catching the risk off bid, and that's that breakaway is significant. It's something we need to be respectful of.
But if the risk off vibe is being driven by higher bond prices and by bond yields, lower bond prices, then the yen, if we saw a situation where growth was the issue and bonds were getting bid and yields were going lower, then I think the Japanese yen would probably work in that situation. But what you're seeing is bond yields are moving higher again, and that to me is just where do you want to park your capital? Is you don't really want to be in the Japanese market, because the Bank of Japan's still got their ultra dovish policy setting. So as long as bond yields are going up and equities are going down, then the yen's it's not going to work, because you're just paying carry effectively in that situation.
It is, and the dollar yen looks great, Chris. I love this chart. Speaking of a chart, I wanted to bring to your attention is the Aussie Kiwi. I know we have the RBA early next week, but look, you thought I was going to come in today being an Aussie bull. You even said it last week. Next week, Blake, you're going to come in being an Aussie bull.
It's changed.
It's against the Kiwi, and I'm showing you just some technicals that I think are really important. We've been in this bullish channel. I actually played the Aussie Kiwi on the long side 2 weeks ago on this breakout, and I made really great money. But I haven't played since it's reversed, but we're right back at the breakout point right now, Chris. That comes in around the 111.80 level. But I want to note the highs that have been made in price and the highs that have been made in relative strength. And when relative strength shows a peak, price peaks. And it's done it so consistently in this chart on the daily chart. So we have the RBA on Monday. I think if we get a solid break back below 111.50, I think it trades back towards 110.70, 110.60. What are your thoughts with the Aussie Kiwi here? It's starting to look a little toppy.
Yeah, it's a tough one. And the RBA meeting for everyone else who lives in Australia is on Tuesday. Blake's a different time zone, obviously. For me, it's a tough one. There's things to dislike about both currencies, but it feels like the downside is more prevalent. And I think you probably at a sort of a higher probability suggest maybe see this trading down to 111. I haven't had my sell signals yet that I like to look at from a more systematic perspective, but they're not a million miles off. And when they do, I'll probably be trading this from the short side for 111, 110.50. And maybe the RBA meeting comes out and suggests, but given what we saw the other day from retail sales in Australia, which were ridiculous, then you suggest that the RBA shouldn't see any reason to be dovish in any capacity. So from that perspective, it's difficult to make a fundamental assessment the RBA is going to cause this pair to go down. But look, at the end of the day, rates are fully priced. A 50 basis point hike from the RBA is fully discounted. We've got a fairly rich curve that the RBA need to live up to. So it's an interesting cross. We've actually got a lot of client activity in this pair, and most of it's on the short side now. So yeah, I favour that side of things. It's a good chart, and I'm thankful you brought it up. But for me, 111 is the higher probability for me.
All right. Well, there you go.